Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, we're going to be focusing on creditors reconciliation. Creditors reconciliations. Did you know that the balance of the creditors control and the creditors list must be the same because the creditors control is a summary of the creditors list? By the end of this lesson, you should be able to understand the relationship between the creditors control account and the creditors list, to identify errors and omissions, to correct errors and omissions, and also to do a creditors reconciliation. Here is the knowledge that you already have. The preparation of the cash and credit journals, we have already done this, the CIJ, the CPJ. We also did your CJ, your CAJ. You're also aware of posting from cash and credit journals to the creditors control account, and you're also aware of the preparation of the creditors control account. Remember, it is a liability account. That means it will increase on the credit side. Here are new words that you're going to learn in today's class. Reconciliation. It is the process of ensuring that two sets of records are the same. So when there is a difference between two sets of records, we then reconcile to ensure that they are the same. Definition. What is reconciliation? The process of finding out why the balance of the creditors control and the creditors list are not the same. So when we discover that the creditors control account and the creditors list don't have the same balance, the process of us now finding out why they are not the same, that is reconciliation. Ensuring that the balance of the creditors control and the total of the creditors list are the same. Why should we reconcile? Both balances of the creditors control accounts and the creditors lists must agree with each other. The creditors control account acts as an independent check on the accuracy of the totals of the balances in the creditors ledger. So the creditors control is an independent check on the accuracy of the totals in the creditors ledger. The creditors control account assists the business in detecting errors and omissions that are in the books. Information needed to prepare the creditors ledger is obtained from the subsidiary journals. So from the subsidiary journals, we post to the general ledger, we prepare the creditors control, and we also post to individual accounts. That is how we create the creditors ledger, and eventually we have the creditors list. It is then important that we understand the different types of errors and omissions that can lead to the creditors control and the creditors list not having the same totals. Let us look at the different types of errors and omissions. Firstly, casting errors or addition. Once you hear the word casting, we're talking about addition. So there are errors that are committed when we are adding that will lead to the creditors control and the creditors list not having the same totals. An error can arise if a transaction is recorded in the creditors control account and not in the individual account, or vice versa. Error of omission, a transaction is not recorded at all. Error of commission, an item is recorded correctly as a debit or credit, but in the wrong subsidiary account or ledger. In today's class, we will see these kinds of errors and we are going to correct them. We will go for an ad break. See you shortly.